One of the biggest questions we get in the mortgage industry today is, are we in for another 2008? Are home prices on the verge of collapse? We know we've seen home prices increase dramatically over the last 4 or 5 years. What is this going to lead to? Well, I invite you today to join me on a journey of data. We are going to look at home prices in America first, dating back for the last 30 years, and then we're going to expand that out going back 80 years. So join along with me and let's look at some data. First and foremost, I want to look at the last 30 years here in America of home prices. We all know what happened leading up to the big collapse in 2008. First and foremost, this area right here from 2001 to 2000, this area from 2001 through 2005, we saw a massive increase. This increase was 55% increase in home prices, a massive jump up. Well, immediately after that, we began to see the collapse. The big collapse that we all know about. From 2007 through 2011, we saw home prices decline by 29%, a massive drop off. Almost half of the gains, over half of the gains that we had gained in the previous 5 years, we had lost, just gone, vaporized. Well, now we look at this area here from the 2018 to 2022, and once again, we have seen a massive increase of 44% in home prices. This is a massive gain. And if people looking at a short history in this, it would be safe to assume that with big gain comes big reset. Big gain, is there another big reset coming? Well, that's where we have to break this out, and we have to begin looking deeper at the history of housing in America. This is just one cycle, and I'm going to dive a little bit deeper into this chart later, but I want to explain this little area a little bit later into this. But first and foremost, let's look a little bit wider view on this. We know the areas we talked about, the 55% increase here, the 29% increase, and the decrease and the 44% increase. But what people don't oftentimes talk about is back here, from 1943 through 1947, we saw an 85% increase in home prices. Was there a big collapse? Was there a market meltdown after that? No. In fact, we saw 26 years of nominal housing market gains, home prices appreciating, before we saw the next, not a bust, but another boom. From 1975 through 1979, home prices once again jumped up 60%. No bust, no boom in this area in between here. Nothing dropped. And then once again, we saw another 10 years of actually more than nominal gains. Some of these years came up 10% right here. We saw another boom cycle after a massive 60% increase. It was only in 1990 is the only other time in history we saw a negative 1% decline in home values. There's only been 6 years out of the last 80 years of home prices where we've seen declines in home prices and not increases. 5 of those 6 were the massive bubble that we saw in 2001 through 2005 that burst going through 2007 through 2011. So let's talk about this data a little bit more right here. Let's pull up what happened here. Well, in this period here that we're talking about right in here, there was also a big uptick in building. The median amount of homes we need in America to sustain household formations. Household formation is when a child gets married and decides they're moving out of the house and they buy their first home. The median age for that is 33 to 34 years old. Well, there was a massive increase in the amount of homes we're building. We need about 1.6 million to keep up with household formations. But during this period here, we were building 2.1, 2.2, 2.3 million homes. There was no short supply. There was an oversupply of housing. Obviously, we led to the crash, this area. But there's another piece of that puzzle that isn't widely talked about. I'm not going to get into the politics of it, but I'm going to be factual on it. There was a massive decline in household formations, a significant decline. And if you trace that back 33, 34 years earlier, that is when the abortion laws were changed and we saw a massive decrease in household formations. So you had builders building way too many homes and then a free fall off of household formations. You had way too much inventory and way too few buyers to buy that inventory, which led us to the collapse. What we're looking at in this situation was a massive underbuilding of homes. When builders went through this whole period right here, we underbuilt this area on a level that is staggering. In 2009, we dropped down to less than 500,000 homes being built in America. We did not reach that 1.6 million range, which is normal, which is the median of what we need, until 2021. And we've dropped off since then. Even as of today, we are not hitting the median amount of homes we need. And there's a massive, massive shortfall in housing. So the question begs itself, are we in for another 2008? Well, I beg to differ. I think what we're looking at in this situation is the exact opposite of 2008. In 2008, we were looking at homes that we had way too many homes on the market and not enough buyers. Today, we are looking at way too few homes on the market and a ton of buyers available in the market. Sure, those buyers may be on the sideline. They may be put to the side right now because of where interest rates are at. But make no mistake about it. Just because a buyer is on the sidelines does not mean that buyer's out of the game. People are still going to buy homes. And when affordability comes back in line through interest rates coming down, I would expect to see another mass appreciation event of 7 to 9% appreciation in homes going forward for the next couple of years. And I do think that's going to be somewhat normal until we can get builders to catch up on the shortfall of housing in America.